Alright, so in this video I won't actually be talking about much. I'm just going to introduce you to the chart here. So what you're seeing here is the chart, and it only consists of two candles. It's called the Japanese candlestick, the Japanese candlesticks. And you can see it consists of a red and a green candle. Now the red candle represents a bearish move, which means price is crashing or it's falling, and the green candle represents a bullish move, which means price is bullish. Now the term bullish and bearish just comes from the fact that the body of a bear seems to be on the downslope. You understand? When a bear is in its normal position, you'll see that from the back down to its head, it's on the downslope like this. And when you look at a bull, from its back to its head, it's upside. You understand? It has a broad upper body, and which makes his back point upward, giving the term bullish. That's where they derive the term bullish from in forex and trading, or in markets terms. Bullish and bearish bear, bullish bull. You understand? So if someone tells you I am bullish, the person is simply telling you he's expecting price to go higher. He is bullish on price. If someone tells you he is bearish, he is simply telling you he's expecting price to go lower. You understand? So that's the term. So we have a bullish and we have bearish. Now we'll keep these terms intact here, and we have bearish. And as we know, bullish is the green and bearish is the red, right? Which is obvious, makes more sense that way. Let me make this a little bit bigger so you can be able to see clearly in the video, because I'm sure it might be little kind of tiny in your own view. Now when you are talking about a candle, this is what a candle looks like. We have this here. I might be wondering, what are these wicks, these tiny lines inside of these candles? Well, those are called wicks. It's called wicks. It's called a wick. It's called a wick, right? Come in, for example. It's called a wick. Now this is it. This is a wick. That's a candle. Now this here is the depiction of a bullish candle, a bullish candlestick. This is the depiction of a bullish candlestick. This here is the wick, just like I'm explaining. That's the wick. Let me make this bigger so you can see clearly. Now that's the wick, right? Now this base is called the body of the candle. This is called the body. That's called the body, and also the one on that is also a wick. Now for a bullish candle, the low here is an open. This is where the candle opens. Every time frame is the time it takes for a candle to close and for a new candle to reopen. You understand? But let me just give you this here. Or for a bullish candle, this low here, this body low, not the wick. You understand? The wick is just the move that happened where the market opened, and then price go below its open, and then went back up and then reclaim that open and go above it. That's why you see this wick is left behind. You understand? That's when this wick happened. So here is the open of the candle. It's called candle open. So this is the open, and here at the top is the close. I will explain it much in a simpler way for you to understand. And this is the close here. Now what I'm trying to explain in this candle is, for example, you can see this, right? As I'm talking about open and close, right? The open and the close. This is currently, if you look at the top here, where I'm pointing with my pointer, you can see it's 1 hour, 1H, that's 1 hour. So each candle here takes 1 hour to form. Each candle takes 1 hour to form. So for this bullish candle, since I'm currently explaining about bullish candle for you, this here is the open. You see this red? That was where it closed. For the bearish candle, the bottom is the close. For the bullish candle, the bottom is the open. So this bottom here is a candle open, as you are seeing it here. This is the open. I mean the close, sorry. What am I talking about? The open. It's the candle open. Sorry about my mistake. It's the candle open. Let me also make this bigger so you can see. That's the candle open. And then you can see at the top of this candle is the candle close. At that top there is the candle close. At the same time, the next candle that opened is also bullish, and then this is the open. You understand? So you see the candle opened here, but after the candle opened, it went down to this range and then went back up and claim back the place that the candle opened. That's why you see this body is all here, and then this place as a wick. The wick represents where markets went after it opened or closed. You understand? And for the top is the highest point. For the top wick is the highest point the candle moved to before, closing, before closing, yeah, wherever it closed. You feel me? It's the highest point the candle reached before closing. Now, in this example that I'm explaining here, this range, as you see, is the candle body, all to it, and this is the candle body. Now here, as I said, is the wick, right? That's the wick. Now what you need to understand is that this candle opens here at the bottom and then pumped up to this range. Now this is the eye. This is the highest point the candle made, right? Yeah, is the highest point the candle reached, and then the candle went back down and then closed here. That was why you see this wick. You feel me? That was why you are seeing this wick. And then this wick under here, when the market opened here, it went down. You see, that's below the open, and then reclaimed back up. Claiming that open, the body continued from there and then popped up. That was how you have this wick. That's how the bottom wick was formed, which is the lowest point the candle reached. Hope you understand what I'm explaining here. And that's the lowest point the candle reached. I can give you a PDF that you can read that would explain everything as you are reading it, you understand? But I'm also making a video for you, so you can also come back and watch the video to understand what I'm saying. I'll send you the PDF. You can also read it, and as you are reading it, you can also come to this video, observe it, and then you will understand what I'm saying. You understand what I'm explaining. Now this candle now is the language of the chart that you need to understand. Each close says something, each open says something. It's not just random. The candle open, close, all these movements you are seeing, it's not random movement. It's an algorithm. You understand? And each algorithm has what it's saying. All you just need to do is understand it. You understand it once we go deeper. So now I just want you to understand the candle pattern. On here, I'll draw a bearish candle. This would be a bearish candle. Now for the bearish candle, you have a wick at the top as well. Sometimes the candle will not open with, like example, for example here now. Here you can see this candle did not have a wick, right? This candle did not have a wick because when this candle opened, the candle closed here, right? When this candle closed, it closed at the highest point it made. It did not go back below, unlike this candle that made the highest point and then retraced back into this range before closing. when this candle reached its highest point, it did not go any lower. It closed there. After 1 hour, it closed there. That was why there was no wick. And after this candle opened here, after this bearish candle opened here, it went above its open and came back down to the open and went below the open. That was why there was a wick, as you can see here. All right, so let me go back to the chart, to this symbol here. Now we have the wick for this candle range low. This is the low. So there is a term, candle range high and candle range low. You understand? This is the candle range high and this is the candle range low, which is the highest point the candle made and the lowest point the candle made. You understand? You just need to understand that, and it's simple. It's not complicated. It's not complicated. It's not complicated. Now for the bearish candle, right here is the open, because it's falling down, so it opens above and closes below. Right? For a bearish candle, this is where the candle opened and then fall down. Right? When it fell down, it closes here. Hope you're getting me. The candle closed here. Now as it closed here, since it's a bearish candle, the next candle that will open will be like this, right? Another top open, bottom close. Hope you understand what I'm trying to explain here. The top is the open of the candle. That was where the new candle formed, and then it crashed down and closed here, and then the next candle opening will be here. So you can see the top is also the open and the bottom is still the close. That's how the cycle continues. And as for the bullish part, this is where the candle will close. Since it's bullish, it's going up. When the candle closes here, the new candle will open and move above, right? The new candle will open from the bottom and move above and then close above, and then it will continue. Now this one should be green, but I'm just explaining. And in any scenario whereby the candle opens here from the bottom, you can see, and then goes below, now you see that the top, when it will not become a top that's an open, because it's bearish, right? The top will now be the open and the bottom will now be the close. That's how it is. You understand? And it's the same wick. The wicks are wicks. You know, the highest point the candle reached and the lowest point the candle reached. That's what a wick means. So I will be cutting off this video here. I don't want to go too far. All I just wanted to do is understand candlesticks. I just wanted to understand the candlestick, the bullish candlestick and the bearish candlestick. Now this is the bearish candlestick and this is the bullish candlestick. Once you understand what I'm trying to say here, then we can proceed into understanding structure. Now we'll go to market structure. After market structure, I'll explain the types of market structure, you understand, and all kinds of situation that the markets form in terms of structure. And then we'll move to point of liquidity. I'll explain liquidity for you and all types of liquidity. Then we'll move to induce POI, point of interest. Then I'll explain all the kind of point of interest for you, and then all that is enough for you to now understand the chart. You can now analyze the market by yourself on your own. Then after you understand all that, which is just the basics, then we can now proceed into advanced strategies, where you can now start learning advanced structure and so on and so forth. So just watch this video and understand what I'm trying to explain here. Just the candlestick, the candle body, the candle close, the open for the bullish side, and the wick. These tiny lines that you see forming at the base, at the top and bottom of the candle. And same thing for the bearish side. This is the candle body, these are the wicks, the top is the open, the bottom is the close, because it's bearish and it's going to continue to the downside. So let me give you a little bit of example for the bullish side. For the bullish side, now you can see right here, this is a bullish candle, right? This is where the candle opened, right? And then the candle closed here, and then a new candle opened here, and then it closed here, a new candle opened here, it closed here, new candle opened here, and new candle closed here. You can see the top is the close, the bottom is the open. Now here in this scenario for this bearish candle, whereby it now crashed down, the top becomes the open, the bottom becomes the close. A new candle formed, top is open, bottom is closed. New candle formed, top opened, bottom closed. You understand? Now the wick you are seeing, the highest point the candle reached before falling back down, the lowest point the candle reached before closing, highest reached before falling back down, lowest reached before closing, so on. That's how it is. That's how the wicks are formed. You understand? That's how the wick are formed. And let me even give you one crazy example of how this wick is, right? Let's say we have this. Let's say there's a stick here. You understand? I'm just going to give you an example. And this here is let's say this is a candlestick right here, right? There's a candlestick here. The candlestick here. So now this candle opened here, right? This is where the candle opened. I think there's no need for that stick that I won't draw inside. Let me remove it. Now this is where the candle opened, right? This is where the candle opened. This line that I drew here is where the candle opened. You get, sorry, is where the candle closed. This is bearish. So let me just switch it to bullish so that you understand, because I'm already using bullish terms to explain it. So yeah, this is where the candle opened, and this is where the candle closed. But let's leave the close first. Let's just talk about the open. Now when this candle opened here, this is it, right? Assuming it opened here and just immediately start going up, there will be no wick. You understand? There will be no wick. But in a situation whereby this candle opened here, it now went below that open and stopped here. Now that place that is stopped, that will be the lowest point where the candle reached, right? So now this place here is the open. This place that I marked, that's the open. Now if the candle now retraces back up back into the place it opened from, right, and now start going up bullish, this is how it will be. It will now start pumping back from here, leaving behind this wick. Now that wick will now tell you that when market opened here, it went down, and this was the lowest point it reached before now going back up. It will now start going back up. Let's now say now stop here, right? Now before the candle closed, there was still time before the candle closed. So now as it closed there, it now reversed back down, came back down a little bit here, then the candle now closed. That's where you will now see that wick. Now that wick will now represent the highest point the candle reached, and this will represent the lowest point the candle reached, and then this will now become a candle close. This is where this candle closed, and a new candle will open, and then continue the cycle on repeat. Understand that. I want you to understand the job of the wick and the body. It's not random. It's not just random line. It has its own representation. All right. I don't even know if I can even send this video on WhatsApp. It's almost 400 MB.